If you were selling on the close and buying today's open, you're doing it wrong. Holy mackerel. Close on the lows of the day, but Apple and Amazon to the rescue. A few other good reports to talk about. Mish, Schneider coming on at 8:35. Going to talk biotech, silver, nat gas. We're going to talk some commodities here on pre-market prep. It's a Friday. It's Halloween. It's not a spooky market at all. Let's get going on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, folks. Here we are, up 54 handles, 6,900. We're back above it. Can we get to that high for the week? Oh, I think that's going to be a pretty big challenge. The buck flat, 99.37, having a pretty good week. TLT flat, down 9 cents, 90.47. USO quiet, 71.82. GLD and SLV going in opposite directions. GLD down $1.43, and silver up 9 pennies at 44.43. And Bitcoin up 3, down 3K, whatever. Today it's up 36.45. 110,600. Let's bring in Triple D, and this market, it is all over the place. I mean, yesterday on the close, selling, get me out.
Yeah.
And then,
they buy it right back. Mega cap to the rescue. I mean, mega rescue mission, mega cap to the rescue. Amazon right after the bell, rescuing the market, reported just a 401. The earnings were good. They started bouncing it and buying it. They couldn't stop buying it. So, and then you get the Apple report and dip, but then ripped. We'll talk about that too. So you get two mega caps trading a lot higher. You're going to see the S&P and the SPY go much higher as well. Now, not so fast because we're going to have some rotation here today, folks. So if you're sitting with your non-tech stock expecting, up 0.8% and make a lot of money today, you're not going to make any money in non-tech. You're going to lose money in non-tech because we are always have rotation.
How can that be?
The ETF effects, Joel. We talk about it. We teach it. We have the whole presentation over on the STN room. I mean, this is where you make some money, understanding these effects, because nobody else understands them. But
that's just such a
try to teach you guys.
It's hard though, Dennis, because it's like when you see the spoos ripping like that, you know, what can I buy? Where you're in competition with all the other people, you're looking for the sympathy, but no, you're looking like,
what can I sell?
What can I sell?
That's
just so. I don't know how you train your. I mean, you've been doing it for a long time, but holy mackerel, that's just...
I'm looking at like non-tech. I think right away is probably going to get hit. This has went on for years since ETFs have just come in, and we'll get to the ETF effects here in a second. Let's bring in the Brentster. He's going to give us the Amazon numbers because we'll break down Amazon and Apple, and then we'll get into some ETF effects here, and that's going to probably take up a lot of the show. But Brentster, how was your evening?
My evening was good. I am waiting for my new microphone. Amazon is delivering it. It is 2 neighborhoods over, so maybe by the end of pre-market prep, I'll have a nice new mic to test out live for the audience.
Okay, well, we love that. We also love the Amazon report. It's one of the biggest positions in my long-term portfolio, making new all-time highs, so I love seeing that as well. Give us those numbers. Why so strong here, Brentster?
Quarter was really strong. Guidance a little less strong. Earnings for the quarter, 195 versus 157 estimate. Sales beating by about $2.5 billion, 180 billion versus a 177 billion estimate. Company looking for Q4 sales, 206 to 213 billion. Analysts are at about 208 or 209, so kind of right in the mid-range there, but couldn't keep a good quarter down, I guess Mr. Market is saying.
Yeah, and then just after the Amazon report, we'll kind of take you through what happened last night. Netflix starts going nuts, and I'm like, what the hell is going on with Netflix? That starts going off in 10-for-1 stock split. Boom. 10-for-1. They like that too. So you had two components Two major components in the S&P, both rip-roaring and rallying. We're still waiting on Apple. Apple's still on deck. But Joel, break down those technicals on Amazon first, because I mean, we break out new all-time highs. It's hard to shorten stocks make new all-time highs. But give us some levels, because you were finding them yesterday, and you were right, Joel. It was bearish yesterday, and look, yesterday was a bearish type of day.
Yeah, for the most part, it was a peculiar day. I will say a couple notes on Amazon. First of all, the pre-market high is 255.55. So that's the only number I could give you on the upside. If you have a target in that area, I would look for it. I mean, there's a chance that you're gonna get googed on this, right? Because goog in the pre-market, it came in a lot. So, but goog had already, it was right against this nice 300 number. But I would use targets, move it up. I couldn't tell you where to buy this thing. The expected move was $17 in Amazon, right? So now you're $10 over the expected move. Option guys are scrambling here. I would just, I would be a natural seller in this today and just scaling up with the bigger size if I wanted out of the position, a little bit of 51, 51 and a half. Hey, I got more for you at 52, 53, all the way up to that pre-market high. I'm definitely respecting that pre-market high. And flat here, or not flat, but quiet over the last few sessions, 250 or the last few brackets here, trading above 250.
Give us a level on Netflix here too, and then we're going to break into the Apple report, because Netflix popping up, leaking a bit, announces the 10-for-1 stock split. Going to make a lot of people like me happy. I like trading them lower price. I hate trading these stocks that are over $1,000. We do have new rules coming into effect here too. I'm not sure a lot of people realize this, but the round lot rule is going to be coming into effect on, I believe it's November the 3rd. Let's go take a look here. Round lot rule. Do we have a date? I think it's November the 3rd. I'm thinking it's November the 3rd. But here is the new rule. So they're going to make new round lots depending on the pricing of your stock here, Joel. You'll find this very interesting. So if you're $0 to $250 in pricing, you're still going to stay at round lots or 100 shares. If it's $250.01 to $1,000, it's going to be 40 shares as a round lot. Yeah, 40 shares is the new round lot. If it's over $1,000 to $10,000, it's going to be 10 shares is the new round lot. So when they show like the 1, it's really 10. When they show like, I guess the 1, the 40 is weird. I don't know how the hell they're going to show that. I guess they're going to show 4. And then if it's over $10,000 a share, we're talking to you, Warren Buffett, Burke A style. It's going to be 1 share is a round lot. So interesting, just the way that they're going to show it. The round lots come into play. So yes, Netflix, which would actually fall into the category of the 10 round lot, it's going to split though. So it's going to be in the 10s for like a week. Would you have a date on the Netflix split?
Yes, we do. It is for shareholders of record date November 10th, and the split is going to happen after close of trade on Friday, November 14th. So a couple Fridays from now.
So it's going to be weird. So if this rule goes into effect November 3rd, Netflix is going to trade with its round lots of 10 shares for about a week. And then it's going to 10-for-1 split and go back to having normal round lots. Question, is this going to affect the options? I believe so. This is a great question because I didn't look into it. But I believe so. So it would make sense that it's going to, because round lots are always 100 shares. So I think so. If anybody can verify that, we could just quickly find it out. I'm sure asking ChatGPT maybe would even know. But is it going to affect options? Round lot size instead of fixed 100? I think it will. It's not giving me the answer right away, but I think it will. So we're going to find out if it's going to affect it, but I'll take for that. That's a great question. So I think it will. I know they want to confuse everything. I always want to change.
I just don't understand what you said.
I hate change.
I'm like, what? Oh, okay.
Yeah. So when you see basically Netflix show 100, that would actually be now 10,000 shares. So if you had 100, if you have 1, it's actually only 10 shares. Yes. So right now on the Netflix offer, I see 1. That's 100 shares. That is going to change. That 1 is now going to be 10 because they show round lots. Because most, it depends on your brokerage. Some of you guys show the actual trades. but normally they're displayed in round lots. So because if somebody's selling like 10,000 shares, they want 1000. They always knock the 2 zeros off. But now it's changing. So 1 share is only going to be 10 shares. Annoying as hell if you ask me. They always want to try to improve things, and I absolutely hate change. But this is the rule. It's already passed. It's happening November the 3rd.
Okay, well, hopefully we can figure it out. And for you, looking at
We'll
all
figure it out on the fly.
different stocks, that's going to be a lot. Netflix, looking for a catalyst, right? This stock has not been performing with the other Mag 7, got smoked on its earnings, and Dennis loves one level. That level is your daily high here at 1127.93. You sniff that in the after hours too, so make it easy. But we're 20 points off that. So there already is some leakage going on here. I don't think you're going to get back up to that pre-market level. Maybe get a little bit of consolidation here. Looking for a catalyst after a bad earnings report. This is good, but not great. But let's see if we can get Netflix going in the right direction.
Okay, and then so all that happens, the S&Ps are ripping higher, and it's going to be a great day for stocks. But then at 4:30, they always report at 4:30, the Apple report comes out. And the Apple report, Brentster will let you give the numbers, but they initially hammer the stock, and the S&Ps go all the way back down to almost flat. Give us those details here, Brentster, from the Apple report.
Apple reporting earnings 185 versus a 176 estimate. Sales pretty in line, 102.5 billion. Analysts were expecting about 102.2 billion. There wasn't too much else in the report. I actually didn't listen to the call to hear if there was guidance on the call. Do we know if there was guidance? There was guidance given a little bit later in the session, right, Dennis? Do you
Yeah,
remember?
there was a bit of guidance.
Yeah, let me find it here. Oh,
So
it was Apple expects total sales to grow 10 to 12% year over year in the 3 months to December. So like the rest of this year. I think that was a surprise. I don't think that investors were expecting a double-digit growth rate. So maybe that had something to do with the overnight action.
Yeah, because it sold off a little bit on the call. It was up at like 283, and then it sold off. But let's go rewind before that. So right on the initial report, and we had CC Liquidator outline this on Options Unchained, our other show that airs every Wednesday, 1:30, I believe. Shameless promotion for our network. But he outlined the expected moves for us on all of these, and the expected move on Apple was approximately 10 points. So Apple closing, Joel, at 271.40. What was the low of that move?
261.79.
It got within 30 cents, almost identical to the low of the expected move. And it bounced, and it bounced, and it bounced, and it bounced, and it bounced some more. And it goes all the way up. It actually overshoots the expected move, goes all the way up to 284, I believe.
285.
285. So here's your expected move. Your expected move was basically 261 to 281, 282, right in there. So we went all the way down, hit the expected move, bounced right off like a basketball, bounced all the way up, go all the way up, take out the expected move, and then get back within range. Those expected moves sometimes really hold the stock. So when Apple started rallying, though, the S&Ps really started ripping then, because you had Amazon already up, you had Netflix already up, and then you have Apple up. You have three of they used to say the Great Eight, all trading significantly higher. So you know what's going to happen then, because heaven forbid, they just rally everything, because they don't do that. They have to if the majority of the gain is 3 stocks, then you got to sell everything else off. So what we started seeing was all the drug stocks start getting hit, all the staples start getting hit, all the value stocks start getting hit. They started hitting the banks. They started hitting Berkshire Hathaway. He owns Apple, for crying out loud. But they don't care because it's value. That has continued into the morning. You were seeing a lot of stocks red. The RSP is trading in the red. Yes, we are up 0.94% on the S&P 500, but the RSP, equal weight, those same 500 stocks, red. This is rotation violent rotation. You will see violent rotation here again today. Lucky for us, we're always prepared for this, and we knew this was going to happen because it always happens. When they rally 2 for 2 on these big days, almost always they sell off all those other sectors. And you can see the QQQ algo gets in there, hammers all its non-tech stocks. They're trading all down them Mondelez. We don't want any candy. Mondelez, you don't care, it's Halloween. We're selling Mondelez because it's in the ETF. It's in the queue. So they knocked that down last night. That was down over $1.50. Did buy that down last night because that's getting a little bit overdone. But you got stocks like Amgen trading down $5 last night. Still down $4 here this morning. Costco goes down. Comcast gets downgraded and goes down. I'm sure Comcast, full disclosure. CSX goes down. You see all these things just going down, 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 down. They have nothing absolutely to do fundamentally, but everything to do with the Qs. Because the Qs have 25 non-tech components in them out of the 100. So they automatically hit all those. Because why? Because the S&P isn't up enough for Apple, Amazon, and Netflix. The S&P 500, that is. That's the way it works, folks. It's ETF effects. We're just going along for the ride.
Yeah, just pull this up real quickly here. You can see how top heavy this is with NVIDIA, Microsoft, Apple, Amazon right in there too. But then you get in, you got your non-tech components. You got Costco, you got T-Mobile, you have Lynn PLC, you have Shopify, you have AppLovin, you have Pepsi-Cola. They must hate when those the mega caps have good earnings reports because they know they're going to get pounded.
I mean, imagine being the CEO of Pepsi-Cola. We should call him up and say, hey, because he probably don't even know. Did you know that every time Apple kills it, your stock goes down? He'd be like, that's the stupidest thing. Hang up with that person. They don't know what they're doing. No, go look. Go down back and go look. But, or even going further, you could say like Pepsi, kind of obvious because it's a staple, kind of moves the opposite. But go to like Ross Stores. Well, that's not a staple. That's a retailer. Why would that be down today? Oh, it's going to be down today, folks. It's going to be down today. It was going down last night. Look at the red candle from last night. Because it's in the queues and it's non-tech. So call the CEO up at Ross Stores and tell him that your stock is going to go down today because Apple and Amazon are too strong. They'd be like, the hell are you talking about? Like, this is the truth. Ross Stores, Fastenal. Fastenal's going to be down there today. Why? Because it's in the queues.
Ooh, Fastenal. That chart doesn't look
Fastenal. Yeah. And again, they overshoot sometimes. I did buy some Fastenal last night. I already flipped out of it, but I bought some 41 because like down 1.5%, down 2%. This is getting a little bit silly. Down a little bit, okay. They're not going to crush them down 5-10%. But there's our money to be made here. You might say, oh, what's 1%? You make 1% times 25 stocks, you just made a lot of money. So yeah, there is money to be made here, folks. So pay attention because if you're a trader, if you're an investor, you don't give a crap. Maybe if you're an investor, you do give a crap because maybe you could buy some of these companies at cheaper prices because it's absolutely nothing to do with fundamentals. So I think if you're looking at long-term investing on some of these and saying, man, I'd really like to get some of that Fastenal, well, you get an opportunity on an Applebee. That doesn't make any sense, but this is the way ETF effects work. It's all that matters. Everything's ETFs. There are more, fun stat, there are more ETFs out there than there are stocks. That happened about a month and a half ago. That is a fact. There are now listed more ETFs than there are stocks. The majority of these ETFs carry a lot of the big names. So that's why the ETF effects are so pronounced. Because if you're launching an ETF, you're probably not going out and saying, man, I'm going to get a lot of people to invest in my ETF. I'm going to go launch an ETF with Pfizer in it. You know, Pfizer and, you know, a bunch of other, you know, smaller drug or big drug names, you know, but we're going to call it the dogs of the dogs and we're going to, Pfizer and Bristol Myers are going to be your top one. No! They are on the AI train. It's all tech stocks. So that's why the ETF effects are so pronounced. It's also why there's a relentless bid beneath on all these stocks because there's new ETFs launching every day. They're usually buying these tech stocks, and then that money comes into those tech stocks. So rants of rants here. We went on tangents, but just teaching you that ETF effects in this market are absolutely everything. And if you're not paying attention to it, you are missing a pile of money.
Dennis, there's like 5,000 publicly traded, non-OTC, we're talking NYSE, Amex, NASDAQ stocks in the US. There's more ETFs than 5,000?
Correct. That number
What?
happened, I believe it was last week. It finally, or last month, it finally occurred that there's actually more ETFs because they do the double longs now. They
Sure.
do the double shorts.
But
I mean,
still,
Apple, how many ETFs just exist for like Apple? You know, how many ETFs? You got the AAPU, which is the double Apple bull.
Sure.
Why in the hell do you need a double Apple bull? Why does AAPU exist? Just buy twice as many. But no, you know why it exists? To get around margin requirements, because some brokers that don't pick it up. Some smart brokers do pick that up. But I mean, is there any point to having a double long thing? If you want to buy 100 shares, buy 200 shares. It's the same thing. But no, they come out with a double long. Get the double short, because sometimes the borrows are tough, and you know this place is getting frail. They have to get the borrows too, so just passing the costs through. But I mean, the whole point to having these longs, the whole point to having these double longs, it's got to be to just get around margin requirements. Is there another reason?
Can you
I can't think of it.
Can you say request not to be in an ETF? Can you just say no? The company, like, no, we don't want to be.
I don't think so. You're listed on the public exchange. Anybody can buy your stock. It's like a mutual fund. You can't say,
No.
oh, this mutual fund can't own my stock. This ETF cannot be in there. I don't think so. So they're kind of at the ETF mercy. I mean, when they load them up in the queues and they put PepsiCo in the queues because it's listed on the NASDAQ, I mean, all of a sudden, you know, it's under the mercy of that. They're trying to go to 5 times. And you know what the fun thing is? If you go to 5 times ETFs, there's the fun facts for you too. You go to 5 times, stock falls 20% in a day, that ETF goes to 0. What? It could be up for years and years and years. If it ever. So if we launch, regulators, please listen if you're listening. I know you sometimes listen. If you launch those 5 times ETFs that have been proposed out there, they are proposed right now. If you launch that, if the stock has 120% down day in its entire history, that ETF goes to 0. So it could be up for years and years and years and years. Oh, 20% down day, it's worth nothing now. Think about the stuff before you approve it, please, because those 5 times ETFs should not be approved. It's guaranteed these stocks. How many stocks are down 20% today? Just one, just today. Let's go look. We're going to do this for fun. I know it's tangent central, but this is all important stuff we're talking about here. So top losers, 20%. There's a couple. It's not any big ones. SPSC. So if there was a 5 times SPSC, that would now be 0 today. SPS Commerce. I have no idea what the hell SPS Commerce is. But, you know, some stocks get close sometimes too. I mean, we have seen 20% down days in big stocks before. It has occurred. It does occur. It happens. So just think about that when you're launching those 5 times ETFs. And think about that when you're investing in those 5 times ETFs. Think about that. A 100 times ETF LZC. If it's 1%, it goes to 0. It's crazy stuff.
Wow, that was great tangent. And I hope people were listening. And we'll have Josh clip that out for later on too.
Sure.
Just going back, Apple, nicely expected move, kind of just settling in here at the 278.44 area. It might be hard to get back up to that high. You see, we've had some pretty consistent selling. Look at this in the context of yesterday's range. No, you got a ways to go to get a gap fill here at 274.14. But a lot of chop after I was looking. I'm like, wait, we're just trade 261, and it's this 83, and it was this little bar right here. So expect to move here. Choppy here between 275 and 280 in Apple.
So we covered 3 stocks. We got Apple, we got Amazon, and we got Netflix. Now there's like 200 companies that reported yesterday. So if you guys want to take the path here, dictate, let me know which stock you want to cover for earnings, because it isn't possible to cover 200 stocks on this show right now. So if you don't give me a stock, I'm just going to go nuts.
Well,
I'm going to Reddit last night. Do Reddit.
All right, let's do Reddit, but let's do it in this order. Okay.
Okay.
We're gonna. This is the order we're gonna do. because someone just asked about the expected move, and I think the expected moves are important. So big charts used to make it easy for you, but no, now you have to go to
Yeah, we're giving you a
MarketGauge.
public source here.
Yes, we are. So we go to Reddit. Okay, you get all this unnecessary information here. You go down a little bit, you go to options. Boom, right? You click on options, and then you scroll down and you see where it closed 194.42. You take the closest strike price, right? There's a 192.50. Nope, there's a 195. That's 60 cents away. You add these two together. You add the 195 call at 16 and this one at 15. So it's a little bit over 31. So that is the expected move. So what you do is you take 31 up from the closing price and look at that as resistance. And then you subtract 31 from the closing price for theoretical support. So
And
I hope that
gives you the
helps you out.
expected
But
range.
yep, that is your expected range lesson today.
And so when it's up 25 and you're like, what a move, it's actually still within the expected move. What's that mean? Any straddle buyers, options who are playing the calls and the puts lose. It obviously likes to stay within the straddle because it keeps option makers happy. It also has the natural market making effects of it, which I've taught on this show here before. People think, oh, these nefarious market makers are just stopping the stock from going higher. No, because if you're long the 220 calls, you become a natural seller above 220 because like the options are always, you can say if you don't have margin, you have to buy and sell the option, but liquidity on the options are less. So I've always, as an options, when I was trading options actively, trade the stock against my options. So if you're long the call, you can short the stock at 225. So let's say I had the 220 calls. I could short the stock after hours at 225, lock in $5 because I'm long the 220 calls. And, then I've got a short position. If it goes back down below my 220, now I'm active again. So there's all kinds of different ways to profit from those options positions. You don't just have to buy and sell the option. The real market makers, they didn't do that. They do a lot of other things with it as well. Use the options for what they're designed for, trading the stock around them. So what happens is when it gets above the expected move was approximately 225. Anybody who's got those 225 calls, selling 226, 227, 228, locking in, 229. That selling pressure pushes the stock back down, keeping in the expected move. Now you have blowout earnings, and sometimes that happens. But that natural selling pressure is what causes this. People taking their profits on their options, trying to hold the price in. That's why we talk about the envelope, the lower band and the upper band. So the upper band on Reddit, 225. The lower band on Reddit, 165. Where did we get to overnight, Joel, on Reddit?
We got to 178.
No, on the upper end. I was doing the upper end first.
On the upper end? Okay.
Oh, you can do that too. But
not quite yet. No, what did we get? 223.51.
Not quite to the upper band, but 225. So real close. So you can see natural resistance coming at that upper band of that expected range. Things matter, folks. This thing works.
All right. Let's see. I mean, it's settling in here. We're up $24. This was a thing that's a little bit different about this chart. The move can always hold here, but you do have some people stuck. I mean, this just made an all-time high at 270, just under 272. I guess the easiest thing to do would figure this retracement real quick for you, and then we can move on to our next stock. But when you see a move, there's a counter move, and that's up at the 236 area. So if that decline was like, that was just a good retreat, we're going to resume this bull market. We're going to get up to this 236 area. We're going to hold 236. We're going to form a base, and we're going to move higher. But it's a good target on the upside. What you have to look out for is if this move doesn't get a continuation back up to that 236 area, makes a lower high, then get some downside for Reddit. But right now, looking good, up nearly $25.
Let's go to Miss Schneider here. She's waiting in the background here. We don't like to keep our guests waiting. So we're going to go to our guest right now. Whoa!
Happy Halloween.
Awesome. Wow. She is dressed to impress today. Miss
Yes,
Schneider
yes.
looking great on Halloween.
This is my Black Widow spider over here, and I am Kiss of the Spider Woman.
Wow. Amazing. Awesome. My kids would love to see that. I'm going to have to show them this clip afterwards. So awesome. Spooky, spooky. How are you trading these spooky markets here, Mish?
Exactly. This is definitely a trick or treat market for sure. Well, I have just a few positions on in the discretionary. We're still pretty well in a full boat on our algos. Lots and lots, of course, growth stocks in there that have done very, very well. I rotated back into silver yesterday after going flat. And I'm really, really hot on the biotech space. But we should talk about the tricks of the market before we talk about the treats.
Ooh, talk to us about tricks. I want to know what tricks this market is up to, because this market has been a little bit tricky with a little bit of chop.
Yes, and there are some real weak areas that, I mean, my favorite expression has been now for about a month is that you don't want the weak links to turn into anchors. Weak links obviously are not enough to stop the rally in the growth stocks. I mean, you guys were really talking about that. I was listening for a while now, but yet those weak links, as we know, can become anchors. So we don't want to see that. So, I always refer back to my modern family, my economic modern family. And we have to start with Dear Granny, because we are going into a season where the consumer has high expectations going into Black Friday, et cetera, and the holiday shopping. And yet, poor Granny's not doing so great right now. XRT has been under the 50-day moving average, and I anticipate will stay there today for 18 days in a row. So that warning is an actual warning. It's broken down not just under the 50, but yesterday it broke down under the 6-month calendar range. So now we have to start looking at the 200-day moving average to see if that comes up as support. So there's your canary in a coal mine. Then you have your cockroaches, right? Jamie Dimon. That's regional banks, KRE. Again, weak link, not exactly at this point yet an anchor, but could turn into one. So why? Of course, that's tied not only to a lot of the rural Americans who go to their rural banks to borrow money, to start businesses, to build homes, to buy homes, but it also represents commercial banks and is also part of the Russell 2000 in terms of some of those commercial banks and the financial component. That too is not doing all that well right now. That's been under the 50-day moving average for even longer. And now you have the Russell 2000, and that's trying to make new highs many times. The question is, does it do it finally at some point? Or was this the start of the breakdown? And that's where you have to confer with the other members. Now, of course, Sister Semiconductors, that's on its own planet. And then, but I think we have to talk about the two kind of maybe positives in the family besides, and that would be biotech, IBB. Mm-hmm. I'm really liking the biotech space. Biotech made an all-time high in 2021, but I think we can kind of erase that as a chart point because that was during COVID, right? So everybody was doing vaccines and things. But now we've made a new multi-year high apart from the 2021, and it's looking good. And some of those stocks are really interesting. We can get into that in a bit. And the last thing before I keep quiet here and let you guys speak is that IYT, let's put up transportation.
Sure.
I'm calling this agnostic, right? Because it's been up and down, up and down, up and down around that 50-day moving average. It closed yesterday back above it. As we're getting ready to open this morning, IYT is, I think, up slightly. I have to, for some reason, I can't get all my symbols here on. Well, what is, do you know what the bid offer is, guys?
In
IYT?
Yeah, I
can give it to you.
Yeah.
It's really wide. It's 70.43 to 72.55 because it's thinly traded during the
So you don't want. So that's fine.
Really wide.
Basically, what we have to say is what could possibly not only prevent Granny regional banks going lower from here, or maybe stopping the train and even semiconductors, would be if transportation starts to pick up. That would be a positive because it's still a cyclical. And it does represent maybe some expansion in the economy, particularly as we're getting more and more into some reshoring. That would be a positive, and that could help the entire Modern Family, including small caps, including Granny. So we're counting on you, Trans, to do your job and stay over that 50-day moving average.
It is. It's clinging to it as we speak. All right, let's go to some individual issues here in the biotech sector. There's quite a few that you put on here. I noticed VKTX had a nice move yesterday, a stock that was left for dead. I think that probably got that extra boost yesterday, right? Wasn't someone sweetened the bid for, what is it, Metsera or something like that? But let's talk about some of your biotech favorites here.
Yeah, well, we've been in Viking Therapeutics for a while. They are related, of course, to the diet drugs, vanity trade. That's been a big theme of mine this whole year. And actually, the truth of the matter is, I think besides the diet drugs still having tremendous opportunity to the upside as we end this year and go into 2026, there's so much news going on, from microdosing to oral medication, research that has come out for how it's done great for diabetes and heart disease. I only think the future for this whole space is good. And Viking Therapeutics has had a nice move based on the fact that it is doing oral drugs for the dieting. So that's been a great mover. I mean, you can see the chart here. It's not quite up near the highs, but yesterday was a nice gap up. And so far, it's coming in this morning. Another looks like about 1.78% higher.
That's right.
Based on where it's at this very second. So that's certainly one. I think 40 is going to be kind of a psychological area for that. Right now, it's at 38.85.
Okay, here's one that is one ugly chart, and I have it. It's ugly. Pfizer.
Yeah, it's really ugly. But, you know, one thing I think we've all learned this year is that if Trump calls out a company, you should pay attention, right? So first of all, they won a bidding war with taking over a company. Again, they're trying to get into the diet drug business. I like the opportunity here only if we can get a move over 25. We keep stopping at 25, except for that big spike that you see there at the early October. That was the announcement with Trump that they were going to lower their prescription drug prices. And then, of course, that news went away and it fell back to the doldrums where it's been. But it means it's on his radar. And they are trying to make strides with the diet drugs, as I said. And they've been an old company. I mean, Pfizer has been around for a very long time.
Yes.
So I think 25 would be my number. We have no position in this, but I'm watching, because if we can get through 25 and stick, we have a pretty good low risk. It shouldn't break 23 after that, or you're gone. And that's a good reward, by the way. I like
most
that.
of the drug stocks have been a victim of just this insane tech rally. I mean, the rotation here has just kept them under pressure. Who cares about a 7% dividend when you're making 70%, in a 3 months on a stock like Oklo? I mean, if the market ever goes into, like, we always think of gold as insurance. You wonder if almost the drug stocks couldn't play a little bit of the insurance game here too. And I'm not talking the health and provider, I'm talking the actual drug stocks, because they got dividend support, and I think if the market ever went into a down cycle, I think these stocks would really start to pick it back up. But I mean, Pfizer, 7.1% dividend, which is actually pretty safe when you look at the balance sheet. It seems like, wow, we're back to where we were 20 years ago. I mean, are we done with drugs? Is maybe, physical AI, if Skynet comes and kills us all, I guess they don't need drugs anymore. But I mean, that's a pretty bad case scenario there. I think long term on some of these drug names, this maybe is the time to start shopping. No?
Yeah, well, take a look at Moderna, by the way.
Okay, yeah.
Moderna since 2021, right? So now all of a sudden, it hits my radar yesterday because it has this explosive move. Now, this might be the last of the stocks that I would necessarily buy for any kind of long-term position, but for day trading, yesterday would have been a lot of fun because there are takeover news. Yes. So this whole merger and acquisition that we've seen in the tech space could start to trickle more into the biotech space as well. And of course, we haven't even talked about biotech and AI. That's a whole other deal going on. That's where Tempest has had this huge move because of AI data with biotech right now. And by the way, what's interesting about biotech, it really is two areas. It's the traditional medicine and pharmacology, immunology, and then it's biofuels, by the way. Interesting. And that put Valero on my radar yesterday.
Oh,
Yeah, because they're one of the leaders right now in terms of dealing with biofuels. And if we're going to have a let's look everywhere, all hands on deck for energy, this could be biofuels could be something that things go back to at some point. At this point, it's been really kind of dead, except Valero's done pretty darn well. But my point is, yes, this whole space has so much opportunity in it. HIMSS would be a part of it, but that's got its own crazy thing going on. And the other thing in the biotech space that I think is really interesting is outside of that, what's happening with health insurance? You mentioned it, Dennis. What is happening? So it's becoming so expensive. And I talk to friends. I mean, I don't have to worry because I'm of an age where I can get taken care of. But we don't need to say that age because you remember I'm a black widow spider. I don't, I live forever. I just eat men as they come along. So after what is it with black widows, right? They have sex with the male spider and then they eat them and kill them, right?
Oh gosh, that's no,
it's true.
Good. Doesn't sound fun at all.
No fun. Not even for me. So anyway, the point is this. What's happening in health insurance is that more and more people who cannot afford health insurance, especially if they work for a company that doesn't provide, or self-employed, or people who are not working, which we know is increasing day by day, they're buying catastrophic health insurance just in case hospitalization kind of a thing. And they're going to Teladoc, or Amazon is also starting a sort of an online doc service. But Teladoc came on my radar because it's not quite what we're talking about with biotech drugs, but it is something to look at. Put up TDOC.
Teladoc, okay.
Yeah, Teladoc. It's another one. It was $60 at one point. It dropped all the way down to like $3 something. And now it's trying to get back over $5, really. And the thing is that this is a company now that you can just call them up, get an appointment with a doc. It costs, I think, $50 if you don't have a plan. Microsoft actually has covered this for their employees. So you can get Teladoc for free if you work for Microsoft. That's a big company that's paying attention to this right now. And so I think that's the future. Like, I can't afford to go to a doc, but I can afford $50 out of pocket if I'm sick. And then they can also they can prescribe medicine. And if you need something more than that, then of course you go on from there. But this is, I think, the future here of medicine is not the traditional health insurance. I know United Health did well, and they're obviously the biggest insurance company, but still, I'm talking to people, and the fallout of not having jobs or jobs that are cutting back on insurance, that's where they're going.
All right, Mish, let's talk a couple commodities here before you go. I know you're following very closely. And you said you dipped your toe into the silver market here. I'm looking at the SLV here. Big old move back up to that high, all-time high, and a turnaround, a pullback, still above the 50-day. What do you like about silver?
Well, first of all, I follow the gold to silver ratio very carefully. And that's really been my guide. Like, for example, when it completely blew out, when gold made its first big move up and the ratio blew out at 105, I knew that wasn't sustainable. So it meant that silver was really, really cheap. And that turned out to be the case. But then it dropped all the way down to about 80, 79-ish, which was the low. Last time we had a low, which was in 2024, was also at around 79, 80, and it popped. So we got out of our silver, we got out of our gold. It looked toppy, and of course that turned out to be true. But I noticed the ratio went up to 85, which was tremendous resistance. And then it started to roll back down, and it got down to about 82. So it's still not breaking down to where silver can go parabolic, but it was enough to give me a reason to get in. Silver, the difference between gold and silver, obviously, is, first of all, that ratio could be inflationary. And right now, we're not really seeing major signs of inflation. Number two is it's an industrial metal, and we know there's been a lot of talk about short supply. And if we are going to play nice with China, that could give a boost to a few commodities, not just silver. But silver to me is still not done. I did not see a top in silver. What I saw was everybody started getting super bullish at the top. You know, in the old commodities expression, when the shoe shine guy tells you it's time to buy gold, you know, the top is nigh.
All right, let's move on to Natty Gas here. You the Boyle ETF, and I believe you have a stock to go with that, AMLP.
Right. So Boyle, I've been playing in and out of Boyle. It's a leveraged ETF. So I like it. I like the leverage in this because you can trade with a smaller position than you would, let's say, UNG. I can't stand UNG. I've taken it sort of, I watch it. And I watch, obviously, natural gas so far. I'm looking at the December contract. It's back over 420. No double entendre there. But interestingly enough, in the December contract, 420 would be a good breakout in natural gas. But Boyle has made a bottom, and it's just been going sideways. Again, it's in energy. Nuclear, yeah, wonderful. I think it's the future, but this is something we have in abundance now. Obviously, from a geopolitical concern, there might be situations with the sanctions we've put on Russia. And so I like it right here. And we're getting into seasonal winter where natural gas demand grows. So, yeah, we bought Boyle. I actually added on a dip, which I don't usually do. I don't usually add when something's going against me, but this is how convinced I am that if I can just sit tight, this thing will explode at some point. That's my thoughts on that.
One more, Mish, just before we let you go. I want to get your thoughts on the small caps because we've covered a lot of different areas here, and IWM is 2,000 stocks that have perked up. And I mean, interest rates going down is obviously going to be helpful to a lot of these smaller companies that obviously borrow a lot to finance their operations here. We just kind of been hanging out, not really doing much for the last month, but we had a good move from 220 to 240 and made new all-time highs for the first time after 3 years. Right. Thoughts here on IWM before we let you go?
Well, today's the end of the month, and I have this really kind of cool Bollinger Band on my monthly chart. You know, I love monthly charts. I use the 23 and the 80-month moving average, measures a 2-year and a 6 to 8 year business cycle, and I think that's extremely important. So that's why I look at that. But essentially right now, it is showing that IWM has to close above 247 this month for it to be really strong. However, if it doesn't, it's still over the 50-day moving average where we just talked about retail isn't, transportation sitting right on it, and regional banks isn't. So that tells me that we could see it separate from the family if it stays here. But I still want to see right now 247. So if we can't close above it today, and it would be amazing if we could, then I would really want to see what happens next week and how the whole family, like I said, weak links becoming anchors, transportation saves the day, and Gramps, my IWM, can continue his move higher. I'm not dismissing a great rotation, but I think I heard you say this before, Dennis. We get it for like a day, and then it goes right back to growth. So
yes, it does.
Right. So we need something more sustained there.
Okay, Mish, before we let you go, you've been working, besides markets, you've been working on some other projects here with the Modern Family. Could you give us a little bit of an update?
Well, those people who know and seen my website know that I have created characters, actual human beings that go with each one of those sectors. Because for me, I needed some level of a personification to explain it to me. That's why you're hearing grandpa and grandma and sister and big brother bio, etc. So what we're doing is we're bringing them to life. Right now, one of the wonderful things about AI and technology is that it has made it possible to do things we could have never done before. In fact, just in the last couple of months. So stay tuned for that. And the last thing, and I can't tell you more because I have to wait for registration copyright before we release it. But one thing is one of our characters, and we didn't even talk about this, was Bitcoin Bro. And Bitcoin, you know, is having its own issues right now. But Dennis, would I be able to record your voice? We can do this separately for about 60 seconds talking about Bitcoin. It doesn't matter even if it makes sense, and use your voice for our character.
Sure. Anytime you want. You just let me know when you want to do that.
Okay, I will send you separately an email or
Okay.
a message on X, and we will set that up. But thank you. Yes, so it's very exciting, and I think it's going to be, well, nothing like this exists. So I think it's going to be a real plus for people who just want entertainment and also get subliminally some education at the same time.
Awesome. Yeah, no, I look forward to that.
Yeah, Mish. Yeah, you mentioned that, and you mentioned the Bitcoin guy is from the Motor City, right?
Exactly. We made him from Detroit, Michigan, even though nobody really knows, since the right? Nobody really knows where Bitcoin started from in terms of, the what is it, Hashimoto? What's the no?
Yep.
Yeah. Anyway, so
Okay.
I decided I like Detroit, Michigan. Why not?
All right, we got to get you to the Motor City. We've been on the line with Mish Schneider, chief market strategist, chief strategist at MarketGauge, guiding us through these markets. We'll be dialing you up again real soon.
Thank you.
Thanks, Mish. Happy Halloween.
Okay, what do we got there, Brentster? Oh,
Holy spooky guest day here. We got the Reaper. Looks like the Grim Reaper coming for us here, man. Oh, he's on his mic's not working. Oh, I was going to say some really cool stuff too. Brentster, I don't know how. This mic died on you too. We lost both the Brentster mics now.
Is this better? Can you hear me?
Yeah, you got it. We got you now. That was awesome. We can hear you. What's up? Is he talking?
I don't know.
Okay, go back. We had him for a second. It was awesome. Okay, he was going to come on and actually do the Hive sponsorship ad with that. I think you're okay. Unmute yourself. We could hear you for a second there. Yeah. Try it again. He looks awesome. Try one more time.
He's trying his new mic.
Yeah. Oh, he's gone. He's left. Okay. Well, we'll try to get him back. He's trying to fix that up. So in the meantime, we did have some news breaking during the segment. If you guys are following Getty Images, I believe Joel was mentioning this one in the chat at one point in time. Getty Images, nice call, Joel. And Perplexity struck a multi-year. You did mention this like a couple of weeks ago.
I added it. If you're signed into our site, you can see all of our positions. I'm not in a fast market like Dennis, but you know where I got this stock from?
No, where'd you get this one from?
Michael Pachter.
What'd he say? Michael Pachter gives us some good ones.
He thinks that it's doing this deal with Shutterstock. Right? Okay. Ooh, that's up $5. I should have bought that too. And he thought he was like a slam dunk. He's like, these European regulators, he goes, this deal is going to go through. He explained it. Also, I don't know if you guys know, my daughter is a professional photographer and she does a lot with Getty. And he just talked about the synergies when this deal goes through. And so I said, you know what? I mean, yeah, I could have bought, these other stocks, had a little cash. And I'm like, I never buy cheap stocks. I'm not selling it today, Dennis. And I'm not even going to look at it.
Sell, Mortimer. Get in there and
No,
sell.
I'm not going to do it. No, that's in like
73% one day. Holy, we need to follow this.
Why would you sell at 3.5 when your target's higher? So
that's true. And a lot of times 3.5 goes to 5, but I don't know. I'm a sell the rip fan. I'd be selling it if I was long it. But gets a rip.
Mikey France. All right, Mike France bought it. All right. Yeah.
The news is Getty Images and Perplexity strike a multi-year image partnership here. This came out at 8 o'clock. Stock is popping big time here right now. So Getty Images and Perplexity, I believe, is the news here. Good call, Joel. Nice trade. Well, actually, we can't say nice trade.
It's an investment.
Nice investment so far. Mike Franz, nice job. I know some other people in the STN room because this was pitched in the STN room by Michael Pachter. Probably bought this as well, but it's not worth $179 a month. That's what they all tell us. Oh well. Brentster, Hive, is his mic ready? I think he's ready.
I hope
a word from our wonderful sponsor, Hive Digital Technologies. This
Let's
show
go.
brought to you by Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. There's a QR code in the bottom right corner of your screen. I dare you to click it and learn more about Hive.
Okay.
Thank
We
you to our
actually-
sponsor, Hive Digital Technologies.
We actually have to clip that and send that to Hive because that was awesome. That was actually fantastic. That was really funny. So I wish I would put you full screen quicker, but I was slow. I was
sorry,
laughing so much I wasn't paying attention.
I'm
But
sorry I did
that was
it.
fantastic. That was awesome.
Thank you, Breadster.
Click it. You got to click it for that. Come on, give us a click. That's what we need. This is what keeps the show free, folks. You go over there and you just scan it. It helps us out there too. So if you love us, give us a quick scan. It takes you 2 seconds of your time. It's like a like. Give Hive a like there too, because Frank Holmes and Hive keeping this show free for you guys. So continuing on, hilarious. Brentster, he's gone. Wow. Even Gabe, lucky you got a tip. Even we got Gabe giving you some money there for that one. That was good.
Those are
That was good.
pounds. That's the British pound.
Pounds. Yeah, I know. So that's even like, what is that? Like $3.
I don't know. I haven't looked at the British pound chart lately.
I don't know where it is either. Okay, market's bouncing around. The rotation is real, folks. It's going to remain here. We have 1 million stocks we could talk about. There is some ratings. Roblox is upgraded by Goldman, downgraded by Benchmark. So a little bit of a analyst fighting there while Goldman wins all day because it's up 3.65%. Other stocks reporting this morning that we didn't get to, AbbVie trading down. ETF effects won't be helping that one either because that is in the queues. ExxonMobil and Chevron we don't mention. One's going one direction, one's going the other. First Solar reported last night. There's just so many companies that reported here that we just can't get to them all. You want to do First Solar?
Sure. We got a few minutes here. Why don't
I can jump in and give you the First Solar. I am long First Solar in the long-term account, remain long. 424 versus 430 is a miss, actually. Sales 1.6 billion versus 1.56 billion. That's a beat on the top line. They narrowed their guidance, going from 1350 to 1650 to 14 to 15. So they're just kind of compressing it a little bit there. But I mean, they're still supposed to make a hell of a lot of money 2025, $15 a share. So I mean, it's trading 245. So this has been a value. This is what I've been saying. I was buying was 8-9 times earnings at 140 because I'm like, I don't know. I'm like, yeah, so solar's, getting hit here, but we need energy, and solar is a form of energy. And obviously credits and stuff are an issue here if those go away. But, we knew from this administration, we were looking at the bill, that it wasn't going to be as impactful for First Solar as it was for others. So it's been green light go for First Solar all year. It's been one of my best stocks. I continue to remain long. The dip got bought last night. Guidance wasn't great. It went down to 220, and they immediately bought it right back up to 245.
And that is, kind of a not real solid chart here. Now, 246.94 is your pre-market high. That is taking out the recent high of the move. No, we got a level. We got 2 levels for you to wrap up the show. We got your not too long ago, we had a high at 246.10, and then you got the dreaded double top at the 249.40 area. So that's what you got here on First Solar. Great week here on pre-market prep. Also on STN, adding more programming. Trader Prad was on yesterday. And Brent, can you hop on for a second? Did his rule, he came up with a new rule, the SSR something rule, short stuff.
The single stock, the short restriction rule.
Yes.
Yeah.
Right?
Yep.
Yeah, that applies for 2 days when the stock falls more than 10%. What was he saying about it?
So Chipotle, he was using that at Chipotle. He basically was like, okay, here's kind of the limit of where I think Chipotle could get down to based on the 10%, right, Dennis? The stock restriction. So he was like using that in his trade on Chipotle yesterday. I think he bought it toward a low.
Using edges off the short sell restriction rules.
Yeah.
I mean, there
Right?
is edges that I've talked about with those as well, because you can't hit a bid unless you're naturally long it. So in some cases, you see when news breaks and they're under short sale restriction, the stocks don't fall as fast as they should. They can't adjust the price because it needs a natural seller to do it. But the rule, so it stands for SSR, short sale restriction rule, and this was put in place in alternative like uptick rule. So it's called the alternative uptick rule. And what happens is when a stock falls 10% in a single day, the short sale restrictions reapply to that day and the next day. And what it means is that you can't hit the bid to get short. You got to get short on the offer. So it doesn't even matter if the bid's an uptick. It's way more restrictive than the original rule.
Mhm.
It's that you actually have to get short on the offer. So all your what you see is when a stock comes out with news and it's under SSR, it's bad news, that offer gets huge, and everybody's trying to hit the bid, but they can't. I've even seen it take 5-10 minutes before to adjust. And I've tweeted out before, I'm like, if you're naturally long this thing, sell it because it's going down. And then, somebody naturally hits it and then it goes down a little bit. And then the offer is just like here, huge still, goes down, still huge, then gets to where it wants to be. But basically because everybody's trying to get shorted on the ask. So that's the SSR.
And one other thing that he discussed too, and I'm doing some research with a buddy of mine more on this. He did something on PreMarket, and what he did was, and there was a market in this, Dennis, and it was by the end of the month, the market cap of Apple was going to pass Microsoft. And so I think he put that on at like a much lower probability that it was going to happen. And then Microsoft went down off its report, peeled back, and then Apple got the big boost. So he's using, not only is he trading, stocks, and I don't know
Doing
what he
some
does with
arbitrage
options,
PreMarket
but I'm
versus
telling you,
stocks.
and there's a lot of money in PreMarket in Kalshi, and that's something that but doing some research with my buddy Rob on it. So that's going to be a project for 2026. But for Monday, we're going to talk IPOs with the top guy on Wall Street, Eric Kroll, author of The
Nice.
Life Cycle Trade. He'll be joining us, and he does his homework. Don't miss that, folks. Be back with you on Monday morning.